And we're going to record it to the cloud. Let's go.
Perfect. Just to make sure, Elena, are you guys seeing the TSAHC with Supreme lending slide?
We are. Go ahead. I can
Perfect.
see the blue screen with
Awesome,
a
guys.
very happy couple. Go ahead.
Awesome. Well, Tony, thank you so much for joining. And those folks who will be watching this video for the recorded version, thank you so much for your time. Look forward to presenting some opportunities about first-time homebuyer programs, existing homebuyer programs for those who've done it before. Again, just to kind of introduce myself, I am a loan officer with Supreme Lending as a mortgage company here in Dallas. The best way to reach me for Tony and the recorded audience is going to be my phone number, 972-863-1833, or you can email me, michael.aguilar@supremelending.com. My website is also listed, and me and Elena will make sure to share this information with you guys after the video. Just so thank you so much for your time and looking forward to present these opportunities for you guys with TSAHC. So just a little bit about this TSAHC company. It is a program exclusively for the state of Texas. So if you are looking to buy property here in Texas, this is for you. Now with TSAHC, there are two different ways that you can receive benefits when using this program. Now, the first one is going to be loans with down payment assistance. These funds do help with closing costs or down payments, where you can reduce the amount of money that you are bringing to the table, again, whether existing or first-time home buyers. The second way to benefit from this, guys, is going to be a mortgage tax credit. So this mortgage tax credit, it can help you actually reduce the amount of income tax that you owe to the IRS whenever filing your taxes year over year. So what I mean by that is you can actually increase your tax refund when using this benefit, or if you consistently owe the IRS money year after year, you can reduce that amount that you owe them as well when using this benefit, as long as you stay in the home. So looking forward to explaining a little bit more details about this. Now going into the down payment assistance option, there are three primary options for this down payment assistance, and it is a 3%, 4%, and 5% option. They each come with their own respective interest rates. And the way this works is that there's a percentage on how much you'll be financing whenever you're buying the property. For example, if you're using a $100,000 loan amount, that's how much you're financing, then you should expect a $5,000 credit when using these type of funds. So this can cover both down payments and closing costs. So again, just kind of the total amount of money that you'll be bringing to the table when it's all said and done. These loan assistance programs are tied to a fixed interest rate. What that means is that your interest rate throughout the life of the loan will not change unless you sell the property or unless you refinance. So it's not an adjustable rate. So I want to make sure that is clear for you guys. It is a fixed interest rate. And again, a big highlight when using this down payment assistance program with TSAHC is that you do not need to be a first-time home buyer. And unless you are using the Heroes Bond program, in which I'll get into a little bit later in the presentation. So moving on, how down payment assistance is presented. There's two options essentially for you guys. The first option is going to be a grant. Now, this grant option is for government loans only. What I mean by that is that the first government loan, probably the most common one we all know, is FHA. It's federally insured government loan. It's really tailored to first-time home buyers using a minimum down payment of 3.5%. Well, this grant will cover a portion of that down payment and or closing costs. Second government loan that is common for this program is the VA loan. So if you're a veteran looking to use your benefits for your eligibility using a VA loan, well, you can also use your down payment assistance as well, meaning you can have a 0% down payment plus closing costs and use this program, meaning that this program will cover the majority of your closing costs. I've seen it where you have buyers come to the table with, $2,000 or less, when buying property. So it could be a very enticing program for veterans. And then the last government option, whenever you're looking at a mortgage loan, is a USDA loan. This loan program is used whenever you're buying a house or a property in the rural area. There is a certain map for USDA loans in which you can contact me, and I'll be happy to share that that map with you and see if your property that you're interested in is eligible. So really the big highlight on this grant option is that it is a true gift, meaning that you do not have to repay these funds. If you were a student here in Texas, you're familiar with how grants work. Well, you can look at that similarly when buying a house. You know, you don't have to pay it back. It's a true gift whenever you're buying property. Doesn't have to be repaid. It also comes in 3%, 4%, or 5% options, again, tied to its respective interest rates. The higher the assistance, the higher the interest rate. It's kind of a good rule of thumb whenever you're looking at these down payment assistance programs. And then the second option, this is going to be a 3-year deferred forgivable second loan. Bit of a mouthful, but let me kind of help explain what this is. So this can be used for government loans that we just went over, or a conventional buyer for a conventional loan. And yes, you heard that right. You can use a conventional loan with down payment assistance. So
can you mention why conventional loan is so surprising to be paired up with down payment assistance? What's the difference between governmental and conventional?
Great question, Elena. So really, whenever someone thinks of a conventional loan, they think of it as a higher end buyer. You have a higher credit score. You know, it's a little bit higher of a down payment. And so it's a common misconception.
Have to come to the table with a lot of money.
Exactly, Tony. Yes, man, you are exactly right. But the good thing is that with a conventional loan, you can actually have a lower down payment when buying a house. So what I mean by that is that the minimum down payment for a FHA loan is 3.5%. For conventional, when using this program, you can go as low as 3%. And as long as you qualify for the conventional loan, you can use this TSAHC program. So like Tony said, yes, it does require a lot of more money, but in this case, you can come with less money. So it's a good benefit. Another highlight on this second forgivable 3-year loan is that there is 0% interest on this second loan, meaning you're not paying additional interest when you're getting this second loan. There is no other interest rate. There's no other, premium on your payment when using this. So that's a really good thing, meaning that your payment is what it is, and it doesn't add on to that. It's very important that you understand that. The second one is that there's no monthly payments on this second loan. And after 3 years of carrying this same mortgage loan, those funds are forgiven. So I'll get into that.
So you cannot refinance. So you cannot refinance during those 3 years.
Exactly, and I'll get into that in a minute, I promise. But something to keep in mind with this option number 2 of using that 3-year forgivable loan is that they offer lower interest rates versus the grant option, meaning the grant options will have a little bit higher of an interest rate because it's true, money that doesn't need to be repaid. But when using the 3-year forgivable loan, it is a lower interest rate than option number 1. And then it also provides options for 3%, 4%, and 5% down payment assistance. So same as the grant. And the way this works, TSAHC will ask you to do 2 things when using this option number 2. First option, they're going to ask you, not require you, they're going to ask you not to sell the property or not to refinance the mortgage loan for 3 years. Key word is they're going to ask you to do those things. So in the situation where rates get so much better and you are just, you have to refinance, right? You can do so. Now, the thing is, on that first thing they ask you to do, if not refinancing, is they're going to ask for those funds back in what's called a pro rata fashion. Meaning, for that example of getting a $5,000 credit, let's say you lived in the house for a year and a half, right? Half of that 3-year term. Well, they're going to ask for the other $2,500 back. Okay. Something important though is that you can refinance. When you refinance, you can cover that 2,500 or whatever that prorated number is into your new loan. You won't have to pay that cash. That won't come out of your bank. That can be rolled into the new loan. So that is something very important that you should understand whenever refinancing or selling the property. Works the same way. The second thing they ask you to do, this is TSAHC now. The second thing they ask you to do is to not miss a monthly payment on your mortgage. If you miss a monthly payment on your mortgage, well, that 3-year time clock restarts. So key thing is try not to refinance or sell and don't miss a payment. Those are the really key things whenever you're using this down payment assistance with TSAHC. Something to keep in mind. And here's the important question, guys, is how do I qualify? What do I need to do to have these programs offered to me? Well, the first one is going to be a minimum 620 FICO score, meaning your credit score will have to be at least a 620 to be eligible for down payment assistance. Second thing is that you will need to be within these income limits, meaning that there's a certain amount of money that you can make to be eligible for this program. So I pulled up a couple common areas that Elena and I work in here in the Metroplex, which is Dallas and Fort Worth / Arlington. It's Tarrant County. But for Dallas, the way they look at it is going to be your household income, meaning that if you're married, it'll be you and your spouse's income considered. So that's the way to look at this. Now, if you're looking for a property in Dallas County, the income limit is $121,750, meaning if you make 1 cent over this amount, you are not eligible to use the down payment assistance program. Same goes for Fort Worth.
Is that the net or a gross income?
Say that one more time, Elena.
Is that for a net income or for a gross income? Because I can tweak my deductions to qualify, I guess.
Right. Yeah. Great question. So it's going to be your gross income. Your gross income. That is what's used to qualify for a mortgage, is your gross income before deductions. So great question. And in Fort Worth or Arlington, Tarrant County, the income limit is $113,000. So if you're making a little bit more than $113,000 year over year, well, Dallas County may be a better suited property if you want to use the down payment assistance program. You can still use it in Fort Worth and Arlington, but again, you're pretty much fixated to the $113,000 income limit.
What
And
if my
hopefully that
spouse
answers
is
your
not
question.
applying on the loan? What if the spouse is not applying for the loan?
Great question. So whenever you're looking at household income, it doesn't matter. Anybody who is in that house will have to be considered when using that income. So great question, Elena. Okay, so here's a few important takeaways. The first one is going to be, you do not need to be a first-time buyer when using the second-year forgivable loan for down payment assistance. It's a big takeaway. Second one is that the down payment assistance options come in 2 ways: that second-year forgivable loan or the true grant. Remember, the grant you don't need to pay back. That is money you get to keep. You can refinance at whatever timeline you want. You can sell the property at whatever timeline you want. Next one is that you are not required, keyword, you are not required to stay in the home any number of years when using this program. But if you do, there are some penalties. And like I said, you can call me, text me, go back in the video and see what the 2 things that they ask you to do whenever you're using this program and how many number of years that they ask you. Now, the next big takeaway is that you can buy anywhere in Texas, meaning it is from El Paso to Galveston, Corpus Christi, and anywhere in between. Dallas, Austin, Fort Worth, East Texas, Tyler, right? You can buy anywhere in the state of Texas when using TSAHC.
I interrupt you right here. So if I'm planning to buy in, let's just say Galveston, how do I know what the household income should be?
So the best way to find out what your household income is talk to your loan officer. You can always call me, text me for any general questions and I'd be happy to help. There's no charge, absolutely complimentary. So, you know, just providing a little value there. So thank you for that question. Now, the next big takeaway here is that the credit certificate, right, whenever you're trying to reduce your income taxes, that second option when using TSAHC is going to be free for a Texas hero. And I'll get into what Texas heroes are in a bit. It's a certain group of people doing a certain profession. Now, the last takeaway is going to be turnaround times when using TSAHC are extremely fast, meaning if you're using down payment assistance, you should not be expecting your closing to take longer or your loan to be longer to fund. It is going to be very similar when buying a house without using down payment assistance. What I mean by that, guys, is that Supreme Lending averages a 20 to 21 day application to loan timeline, meaning that you can write an offer in 20 days as your closing time and expect for your loan to be funded. That is exclusively with Supreme Lending and exclusively when you are using either me or any of my colleagues here at Supreme. We are extremely good at turning around and funding your loan extremely fast.
Just to let you know, guys, when I usually work with other lenders, not Supreme Lending, my turnaround times are minimum 30 days on FHA, and I give myself 40 days on VA, and I give myself almost 45 days on USDA, to be honest. Because, and the sellers don't like it, so sometimes we have our offer rejected because somebody else was offering them faster closing. So him offering closing in 3 weeks will put you in a leverage position, means you have a leg up over other offers for the same amount using the same funding. Whoever closes faster, the seller will usually go with whoever can give them the money faster.
Great input, Elena. Just keep in mind, this video is recorded August 20th, 2022, meaning that in this market today, there are a smaller pool of buyers. What that means for you is that there's less competition on a house. If you want to put an offer on a house 6 months ago, you're expecting to compete with 20 other people. Nowadays, you're expecting to compete with 4 other people. Meaning, so if you can write a faster closing time, you're competing with less people, your odds of getting into that property and having your offer win are very high. So it's very important.
Question, please, sir.
Yes, ma'am, Tony.
Are you able to say use the TSAHC? I like the way that sounds. That's easier to Elena.
Yes, ma'am.
As well as maybe any incentives that the buyer is offering, say, you know, how new construction, they give you so much towards closing or so much to, are you able to buy your interest rate down at any point with that?
So great question, Tony. And I'm going to dissect it in 2 ways. The first question was, can I use this TSAHC if I'm getting credits from either the builder or the seller? The answer is yes. That answer is yes. You can still get seller credits and you can still get builder credits if they offer, because this TSAHC program is tied to your loan, not to the actual offer or not to the actual contract. That is purely based off what you guys negotiate, right? That's what you guys negotiate. But as far as your loan is concerned, this is where the assistance comes into play. So yes. Second question was, can you buy down your interest rate when using this? No. This interest rate is a one size fits all, meaning if you have that 620 credit score or an 820 credit score, your interest rate is going to be tied to the amount of assistance that you use, right? 3%, 4%, and 5% options are most common. The lower the amount of assistance, the lower your interest rate. The higher the amount of assistance, the higher interest rate. And you cannot buy it down because it's a one size fits all. Hopefully that answers your question, Tony.
Got it.
Yes, ma'am.
Thank you.
Okay.
So
yes, ma'am.
the 3 depends on the lowest amount that you need. 4, the 3, 4, and 5 depend on your credit score, or it depends on how much you want to borrow.
So not necessarily. if you have a 620 credit score, you have all options available to you.
Okay. So it just depends on how much you want to borrow.
Exactly. How much you want to borrow, what interest rate do you want, you know, that comes into play. You know, it's for example, if you have a let's say scenario, you have $9,000 saved in your savings. That's all you want to let go and part with whenever you buy a house. Well, you may be have maybe the 4 or 5% option that is best suited for you because you need those funds. You know, the 3% option probably is not going to be the best option because you can't afford it if it's $12,000 or $13,000 out of pocket.
That much. Okay.
Exactly. So it's kind of up to you, and there's pros and cons, and the best way to kind of figure out what's best for you is talking to your loan officer.
How
Just call
much
me.
you want the loan officer and okay, got it. Thank you.
Exactly. Yes, ma'am. No problem, Tony. I appreciate the input. Now here's a little bit more about what TSAHC is. You know, what's the catch? You know, who is this people giving me money and why, right? So TSAHC stands for Texas State Affordable Housing Corporation. They're a nonprofit organization in Texas. Their mission is to serve housing needs of low-income Texans, right? We have those income limits, and for underserved populations. And you can talk to your loan officer if a property that you're interested in is in a targeted area or non-targeted area, and what that means for them. They fulfill their mission through the concept of 3 different things. First thing is just building, right? Programs for developers. As Tony was saying, you can have a new build property and still use this program. That is one of the key things they focus on. The second thing is buying, right? So for either home buyers, lenders such as myself, or a realtor such as Elena, these programs are for us to market for buyers. Buyers need to understand that these options are available to them. That is something that's important. You know, helping them achieve the milestone of home ownership, right? That's huge, owning property here in Texas. And then the last benefit that they really key their mission on is going to be staying in the home. They want you to stay in your property. And what that means for you is that you are building equity. The way I look at the word equity is ownership. Stay in your home, you build ownership. Every single monthly payment that you make on your mortgage payment will go to the amount of ownership that you own in the property. It's very important because that gives you more options. Whenever you're selling the house, you get a better profit. Or if you're refinancing, it's a lesser amount that you have to finance. Really gaining that ownership, gaining that equity is the most important thing whenever you're buying property. So TSAHC is here to focus on that concept in their mission. Okay, guys, so here is what a Home for Texas hero is, right? There's a lot of different benefits for heroes, such as a lot of fees when using these TSAHC programs are waived, and they're more lenient with income limits. Well, here is if you qualify for a hero. You can be a public school teacher, a correctional officer, a police officer, a firefighter, even a school counselor, active or a veteran in the military, school librarian, and emergency medical personnel. So if you are in one of these professions, talk to your loan officer about what other benefits can help you whenever you're applying for your loan, because this is very important, but you have to make sure that you disclose it. Okay, so getting into a little bit of detail about what this down payment assistance looks like for a conventional loan. Okay, so when using the conventional loan, you're using the HFA program. I was mentioning earlier, the down payment can be lower than an FHA, right? FHA down payment minimum is 3.5. Well, when using conventional, only 3% is required when using this program. So you can really come to the table with, you know, a very low down payment plus closing costs and have TSAHC cover a good amount of the down payment and closing costs. Now you can use either Fannie Mae or Freddie Mac. The easiest way to explain this is that these are 2 big banks of who funds these loans. There's different underwriting systems, different underwriting requirements when using a Fannie Mae or Freddie Mac conventional loan. This can allow you to qualify. If you don't qualify for Fannie Mae, well, the odds are you have a chance of qualifying with Freddie Mac. So this is something that you can use to your benefit when applying for the
But please
conventional
be
loan.
aware that not all lenders are flexible enough or have enough interest in you to try to underwrite you through two different programs. I have seen different lenders who won't even mention Freddie Mac to you if you didn't qualify. And I've seen other lenders who will go out of their way and try to check if you'll qualify through Freddie Mac. So it depends on the loan officer.
Thank you, Elena. And just know that anytime you work with me, I use what's called a dual underwriting system, meaning whenever I'm running your loan through an underwriting system, I use both Fannie Mae and Freddie Mac. It gives me an instant response to see if you qualify or not, right? So it's very important whenever you're working with me is you get that benefit. Now, here are some of the requirements, is that there is no upfront mortgage insurance premium. So, you know, in comparison to an FHA loan, it is more costly. You know, although it's a government loan, you know, 3.5% down, it is more costly because they offer or they require mortgage insurance. And we will get into mortgage insurance in our series of webinars to help you understand what that is and how that affects your loan. And then another benefit with conventional loans is that your mortgage insurance can be canceled at 20% of equity, right? Ownership. At 20% of equity, you can request for mortgage insurance to be canceled on your monthly payment. But at 22% equity, you're required to have that mortgage insurance canceled. So that's good. That can lower your monthly payment by simply staying in your home and gaining that equity in the property.
Just to clarify, you guys, how it works. When I first got into my house, let's just say that my monthly payments were $1,600, and once my PMI or private mortgage insurance dropped, I was able to refinance, and it went down to $1,200. So I saved $400 per month refinancing and dropping the mortgage insurance.
Awesome. Thank you for that, Elena. It's about $400 that you can save on your monthly payment. So if you're not using the down payment assistance with TSAHC, remember, you can still use the tax credit, the mortgage tax credit, helping reduce how much money you have to pay to the IRS or help increase how much refund you get on your tax return. Those are key things, guys. So for this mortgage credit certificate, requirement is a first-time buyer only. They will look at your tax returns to see if you've claimed ownership in any property in the past 3 years. So they will verify that. And then the second thing is the annual tax credit has no maximum value, meaning that you can, whatever tax credit you have, there's no cap on it. You know, you will be able to get the credit you have from your loan amount on the property that you bought. Now, one key thing is when using this credit certificate is that this property that you are using must be your primary residence or principal residence, right? So if you're applying for a homestead exemption, right, that's some sort of county property tax reduction, and use this mortgage credit certificate, I mean, you're really cutting down how much money is owed for taxes, how much money is owed there back to the IRS or to the whatever county you're living in. That's how you maximize lowering your taxes. So talk to the right professionals, talk to the right loan officers, talk to the right realtors to offer you programs like this. Also, the debt to income ratio is reduced, so buying power can be increased. What I mean by this is that whenever you use this tax credit, your loan officer can use that as qualifying income. In simpler terms, if you qualify for a $300,000 house, but then you use this tax credit certificate, the qualifying income can push you to $305,000, $310,000, maybe $315,000 for your purchasing power, your buying power. And that can, you know, really open up the amount of inventory of properties that you're looking at. So there's more ways and more benefits of using this mortgage credit certificate. Last thing is that it is free if you are a HERO, Texas HERO. Remember, emergency medical professional, teachers, public school counselors, firefighters, police officers, things of that sorts. And what's the difference between a tax credit and a tax deduction? A tax credit reduces the tax liability of taxes owed. So this means that you are reducing the amount of taxes you owe to the IRS. And a deduction is reducing the taxable income. So it's pretty important that you know the difference between the tax credit and a tax deduction, right? Whenever you're filing your taxes. Okay, so
Hey, Michael, just to let you know, we're 5 minutes over.
Perfect, no worries. And if you have any general or detailed questions about what we went over, Tony, I'd be happy to help and happy to answer as a consultant for you. And if you are listening to this recorded, I'm going to bring up my contact information once more. But that way you guys can have it. I mean, this program is truly awesome if you're existing or first-time home buyer and you're looking to buy property here in Texas. So just know that you can use this to your advantage. And let's see.
I need to do a separate webinar. So I'm really big on tax liabilities and keeping more money that you earned. So we might need to do a separate presentation on how to use the mortgage tax credits to reduce our tax liabilities for families.
Absolutely. But thank you so much for your time, Tony. And if you are watching the recorded version, thank you so much for spending some time on how to reduce the amount of money you use whenever you buy property, or reduce the amount of money you owe whenever you are paying taxes or getting a higher refund. Again, my name is Michael Aguilar. I'm a loan officer here with Supreme Lending. You can call me at 972-863-1833 or email me at michael.aguilar@supremelending.com for a quick response. Thank you so much, guys.
Thank you, Michael. And we're going to wrap up. I'm going to hit stop. I'm going to stop recording. It is going to be about an hour, but within an hour, I should have this webinar uploaded online. I'm going to share the link with everybody who signed up for the class, whether they attended or not. And then hopefully we can, help you guys to get into your first home.
Yes, ma'am. And thank you so much, Tony. Hope you have a great weekend.
You too. It's gonna be really wonderful now. I just got that college student off to school.
Oh, that's
yes.
awesome. Where are they going?
UT Tyler.
Ooh, very nice. Well, that gives you a place to visit.
Yeah.
I actually went to school out in West Texas, out in Texas Tech, and some of the favorite times, some of the most memorable times was family weekend or parent weekend.
Oh yeah. It's in October. Yeah,
October.
I can't wait to get back out for Family Day. Yeah.
That's awesome. Well, hopefully, you and I can work together, Tony. I'd be happy to help you get into a home and